interest rates and closing costs. So I'm going to give a quick disclaimer. Ben and I cannot quote specific rates because then we have to get into compliance issues with APRs and all this other, legal jargon. So what we're going to talk about is more of a range and direction and trajectory of interest rates than in closing cost, because in Ben's situation, I'm sure it's going to be just like mine. Everybody has a different situation. I could have two people walk in the room with different credit scores, down payment, type of house they're building, and have it go in two different directions. So Ben, just roughly, can you give some kind of ranges of, if we just assume some of the best rates for high credit scores and good loan to values, what kind of ranges are you looking like? And then also with closing costs, just rough.
Yeah, I'll tell you. So again, it reverts back to what customer segment you qualify in at Greenstone. Whether you're a rural resident customer generating no ag income, you're on less than 10 acres, or if you're a part-time farm customer, you have that agricultural income of $500 annually, or you own 10 acres or more, that'll dictate your interest rate. 700 credit score or better will qualify you for the lowest interest rates with Greenstone. And with a rural resident, the rates are going to be, let me just verify today because I'm pulling up ours today. Yeah. So for a rural resident, they run about a quarter of 1% less than our part-time farm customers. So if you have a 1% for a part-time farm customer, the rural resident is going to run at 0.75%. So it's a 0.25% difference between the two. The reason being, as a part-time farmer with us, the options for building, there's really no limit to them, and the flexibility is much greater, as well as on 10 acres or more, there's fewer lenders that can do the type of financing that we're doing. So it's more of a risk, I guess, is the way it's perceived.
Right.
But did you say you wanted me to give a general range?
Yeah, just so that people can kind of see the market. I actually, while Ben's showing that, you guys, I'm going to do something for you here. I'm going to actually show you a screen so you can get kind of a feel of what the market looks like. So hopefully you can see this. This is actually mortgage-backed security pricing for today. So these are bond prices, not interest rates. So they're inverted, okay? Meaning as prices on bonds go up, rates come down. So you can see where, back here in May, that's where we took that big jump off the cliff and rates skyrocketed. They've been making their way back up. We've had some nice rallies, you guys. So rates change on a daily basis, just like the stock market. So what Ben's throwing out there, that's why we can't quote rates. He's just giving you some ranges. You can see we're starting to make a little bit of a nice recovery. That could change tomorrow, though, in a heartbeat, you guys. So know that you've got fluctuation inside of there. So that's important just to consider. Okay. All right.
I will just say, so if we're going to go with our part-time farm category customer, which I said those rates are a bit higher, but the flexibility is much more available. And there's some other key perks there that I would speak to a specific customer on. It's a little bit too lengthy today. But today, I mean, you're looking at, if you go to a 30-year fix, it's the largest amortization we can do. You're looking anywhere between 6 and 7%, that is. And then as a rural resident, it's about generally around a 0.25% less than. Again, that's variable on your credit score as well as day to day, because interest rates do change daily.
Yeah, perfect. And so, guys, I'm just trying to point out. So, when Greenstone's doing stuff, they're doing things that a lot of other people can't. So if you go to them and that rate seems a little bit higher than the market, well, because they're doing things other people simply will not do. It's a risk factor. Okay, they're not trying to be predatory or gouge you. They're trying to fill a place in the marketplace, fill a need in the marketplace based upon overall risk. Okay. So with us, you're going to see our rates be a little bit better than that. We're down into the mid 5s, but we have, we're not going to, you got to have a licensed builder. Then can let you do this on your own. So there's different risk factors that fall inside of those categories. So keep that in consideration, and knowing also that those rates change on a daily basis.